Okay, traders, so I speak a lot on the channel about stats that you need to see in your trading to know whether you're profitable or not. And so basically today, I'm going to go through the results of my Telegram channel this year so far. We have 10 months of trading, and I want to show you the reality of trading. It's not going to be 5 trades every single week, every single month, every single week is going to be fully profitable, but I want to give you a realistic expectation on what you can expect in the markets. Obviously, I haven't traded every single day of the year. I have certain trades that have missed by like a pip or missed my TP by half a pip, and there have been some frustrating situations, but overall we are profitable, and in my opinion, very profitable. And I'm going to break down the stats for you in today's video. So I have been tracking the stats on this document, and you can see it. I posted it, a lot of the results on my Instagram story. You can go on my highlights and see all the results from the group in there as well. And you can see that these are all of the trades we've actually taken. And it doesn't seem like a great deal, but it is extremely profitable. And over the 10 months of trading, we have returned 20.5% profit, which is very good. The way that people see trading nowadays is that if you're not making 20 or 30% in a month, then you are considered a poor trader. But if you compare this to the S&P 500, that on average returns 8, 9, 10% a year, with obviously a higher drawdown, then it does put it into perspective quite nicely. And you can see that our biggest losing streak was 3 losses. We have had that twice, 3 times actually. But the beauty of this strategy is that 1 win wipes out all 3 losses. So we have a losing streak of 3 trades wiped out by a win. And then obviously you can see overall that we have these small losing streaks, but overall we are breaking to the upside. And if this was, I know it's a weird comparison to make, but if this was a currency pair that you are trading, this chart would show bullish momentum. You know, we're not breaking to the downside, we're breaking to the upside continuously. And overall, it has been a good experience in the markets. And I'm not going to come on here and tell you that we're going to win every week or we're going to win every single month and that we're going to have trades every single day. No, I go through what I'm seeing in the markets. If there's no trade, I will say that there's no trade and what I'm looking for there to be a potential trade. And you'll see that some months we even trade and we might not even end up in profit. You know, that's just how it goes. Like this month we are down, but then that's fine because all we know is that 1 win wipes out all of those losses, which is a great stat to know. And something that's great mentally, trading with a slightly higher risk to reward. I know people won't see a free risk to reward or 1 to 3 risk to reward as a good risk to reward, but based on my win rate of 50%, it is a very good risk to reward. We also know that on an average trade, we will make $854, which again, very, very good stat. The reason why this is so important is that I know on an average position that I enter, win or loss, that is going to be 0.85% profit. And in this example, I have calculated it based on a balance of $100,000. So if you were trading a $100,000 account, you would have returned $20,500, which would have been an average of $854 per trade. And obviously you're going to say, well, if you average that, then how does that work with your losses? But you need to average overall what you expected to make on a single trade. And that is what I am expected to make, which is great because, again, having a positive average trade or expected value does mean that your trading is going to be a lot easier. It gives you confidence going into the markets. So I'm confident entering trades, even if I do lose 2 in a row or 3 in a row. I'm confident entering the next trade because I know that it is profitable and that the data is giving me that confidence. So the people that are trading without the data are trading without confidence, and that is the way I see it. So this strategy is very simple. I look for a break of structure from 8 a.m. to 12 p.m. in London session. I can quickly show you an example on the charts here. So I have the session indicator on my charts. So you can see here, this grayed out box, it should be showing up, is the area I'm looking to trade. So if there's a break of structure in this zone, then I will trade. Same yesterday, we can see a similar situation. This was actually one of the losses we had yesterday in this consolidation. We were selling, I think around this area, somewhere like that. And yeah, something like this. And we had the worst consolidation I can remember. But what you have to remember also is that if you are trading, obviously back here, you can't predict consolidation. You can't predict what's going to happen in the future. So you just have to trade the plan normally and just hold price. So just hold the trade. And that's what we did. We held the trade and this is what happened. But again, trading within the hours is great because we know quite quickly if there's going to be a setup or not. So I open the charts in the morning, whether this is before 8 a.m. or at the 8:15, 8:30 candle, because obviously we can't have a setup before, one or two candles is actually formed. So we know that we don't have to, be sat on the charts staring at them an hour before the session opens, because the way that I trade with the breaker structure, it has to be after 8 a.m. So before 8 a.m. a candle can't possibly close and give us an entry signal. And that is why I wouldn't be glued on the charts before that time. And having such a small window, 4 hours of trading, and there's obviously 4 candles per hour, there's only 16 candles that I'm actually looking at. So technically you only have to look at the charts every 15 minutes, or you could do it every 14 minutes so you can see what's happened and then react if you do need to on the next candle open. So it doesn't mean that we have to be staring at the charts all day. And obviously everyone in the group knows the times that I'm trading. So they'll be predicting when I'm going to send any entry or exit analysis. The main benefit of me doing this for myself is that I have to explain my trades, which in my opinion is the best way to learn. If you're having to explain your trades in a short video, 3-4 minute video explaining what's happening in the markets today, why am I entering this, why am I not entering this setup, then in my opinion that is the best way to learn about yourself as a trader, and to also teach yourself about your trading plan. Because in my opinion, if you can't enter a trade whilst also explaining exactly why you're entering that trade to someone and it not making sense, then you shouldn't be entering that trade. But if you can do that and it does make sense why you're doing it in line with your strategy, then it is a valid trade to take. But I see so many people that are on the other side of that. They enter a trade, they don't know why they entered the trade, and they end up losing as a result of this. So you can see here, I will go through the session, exactly why I'm entering certain things, and I'll go through all the key levels and why there is a trade or why there isn't a trade on that certain day. And also you can see here a weekly recap when I go through every single day of the week, going through the analysis. As you see here, there was a missed trade. What happened with that missed trade? What happened with all the setups? And that is what I do, because again, it's something that I used to do on YouTube quite a lot. I'd go through all the trades taken for the week, but it's easier for me to just send it quickly in the Telegram group rather than having to deal with all the YouTube side of it. And again, it helps me too. It will help you guys and it will help me in my trading. So going back here, what I do notice is that losses come in streaks. So when I'm winning, obviously we had a really, really good few months here, and that is when we gained most of the profit for the year, which is great. In February, we made 12%, followed by, a 3% and a 2.5% month. So again, sometimes in your trading, what you need to realize is you won't be making profit every single month of the year or every single week of the year. It could be the situation when you're making profit for 2 or 3 months of the year, and the rest of the year you are kind of ticking over, making some profits, or maybe you are break even. But as long as you are profitable in the year, that's all that really matters in my opinion. It's different if you are a trader who is living on your income from trading alone, because it can be quite difficult mentally not seeing profits come in every single month, and having one profitable month that you have to live on can be quite difficult for budgeting. Whereas in my situation, I'm not living off just my trading profits, so it is easier for me to make profit in 2 or 3 months of the year, and then the rest of the year be slightly different. What you also probably notice is a few of the months here we were profitable, but I had a lot of more profitable trades on my prop firm accounts. The reason this is because I have 2 different types of trades. I have the A plus setup and I have the B setup. The A plus setup are these trades here, ones that I'll only take on my own capital. And that's obviously because they have the highest conviction. As you see, we have a 50% win rate on this strategy so far. We also have the B setups. These are ones that I would take on prop firm capital, on challenge accounts, on funded accounts. The main reason behind this is because if I lose a trade on a prop firm funded account and I lose, let's say $2,000, I'm not losing that $2,000. There's no money that comes out of my bank if I lose that trade. So I'm going to take trades that maybe aren't as high conviction, but they are still profitable, from the data that I've collected. So there will be more confluences on these trades taken here. That is why we do have very, very minimal max drawdown. And the max drawdown of the year, I think, is 3% or something like that. Yeah, 3% max drawdown for the year, but we return 20%. So we're returning 6% for every 1% of drawdown we have, which is an amazing stat. Whereas on my prop firm accounts, challenges, or funded accounts, the drawdown will be higher. I will lose more trades, but it also allows me to take more trades. And with a higher risk, it allows me to pass challenges quicker. So I keep the two sides of my trading separate. I see a lot of people combine their prop firm trading with their personal account trading. But in my opinion, prop firms should be treated as a business. Personal account trading should be treated as preserving your capital, i.e. minimizing your drawdown, minimizing your loss size, your losing streaks, but also maximizing the upside potential. And as we know, if you are in profit, then it is so much easier to scale because you have that buffer. The exact same what I talk about with funded accounts and challenges. If you are in profit, you can use the profits as a buffer to maximize future profits. Just like this account now, something very bad would have to happen for us to go into drawdown on this account overall now, on these results. And the reason why this is because we have that massive buffer now. We're just risking profits technically in the future. So let's say we do win another trade, we're back up to 23.5% in profit. If I then lose two trades, I'm then only down to 21.5%. So I'm still in profit the whole time, which is the beauty of maximizing your winning streaks here. Some people, they'll win two trades and then they'll stop trading. This is okay to do on funded accounts because you want to withdraw your profits and make it risk-free. But on a personal account, if you are winning and you're having a good streak, make the most of it. Enter those trades. You see here, this one small area of trading here, we had 3%, 3%, 3%, 3%. That alone is 12% profit. We had that 1% loss, so we're down to 11%, up to 14, up to 15, up to 18% profit. And that's not even many trades. 8 trades and we're at 18% profit. So you make the most of the momentum of the winning. And then the rest of the time, when you are noticing that conditions aren't great, that's when you preserve the capital. And that is the main goal in your trading, preserving the capital for future gains. So if you did enjoy this quick breakdown of the Telegram group and some insights into my prop firm versus personal account trading, be sure to let me know if you want more breakdowns like this of perhaps different accounts I'm trading, prop firm challenge breakdowns, or anything you are looking for me to provide info about. And subscribe to the channel. I'll catch you guys in the next video.